Very, very interesting stuff that Moses is talking about. And if I can bring you in here, Martin, what he's saying looks all nice, like chocolate and ice cream. It tastes, it sounds amazing. Huh? It sounds amazing that, when the London Stock Exchange opens, and then he has this big word, NFP, yeah, then you're able to see the various stocks, and then you're able to trade, and then I'm going to make $20,000 at the end of $20,000 plus to $100,000 at the end of the month. Wow! I mean, it's very enticing. However, Martin, we know life is not like that.
Yeah.
There are lots of risks. Lots of risks in this market or in the forex trading. What are the risks in forex trading?
Thank you. Basically, it's not a bed of roses. These are very volatile markets, full of sharks.
Well, since I met the gentleman in the boardroom this morning, they've been talking about sharks. Beware of sharks. When you talk about sharks, what do you mean?
It's something we used to refer to big financial institutions, big banks, which drive these markets. Because when you are trading, you are connected to what we call an interbank system. Now, these big banks like JP Morgan, Goldman
Sachs, yeah.
Bank of China, Bank of America, Construction Bank of China. This one, they are the one with ability to move the market. They can decide let the dollar go up, let the pound go down.
So, and you never know which move they're going to make.
You can't know. So for us, we are at the peripherals. Just we have to read their footprints. We have to tiptoe behind them.
Indeed, they're sharks.
Yeah.
No, so they can move the market when they want.
When they want.
So you could have actually made a right trade as a person on the periphery, as a small boy.
Yes.
But then the shark comes and makes a big move, that is contrary
to what you wanted.
To what you wanted, and you're eaten.
Then you lose.
Now, how does a person avoid a shark?
Yeah.
Or is it inevitable that once you're in that water, the shark will have to come and eat you?
Since we know we have no control about the markets, for that one we accept, because that's how the world economies work. So it is always these big guys fighting each other, the Chinese, the Americans. So since they are fighting each other, for us our job is to track their path. For us, we have to tiptoe behind them to see how they make their moves. So the best way to survive in this market is by doing what we call risk management. You invest what you are willing to lose. That's number one rule. Second,
just repeat that again. You invest
what
you're willing to lose
for your mental sanity, for you to be stable in the game.
Okay.
Because once you lose what you are not able to lose, you lose the stability, so you fail to take even the next trade. Because in most cases, you lose once, then you stay out, you come back when the market has moved your way.
Yeah.
So if you had risked too much, you lose your account, then you have no money to invest again. So what we say is, we do stringent, or we do a very tight risk management system, such that if I invest $2,000, assuming I start with $2,000, we make it very hard for you to lose this money. How? By maybe risking $10 per trade. So if I risk $10 per trade, you divide that by 2,000. So those are how many times you have to lose before you blow this account. So, and we know how this market behaves. You lose once, you lose 2 or 3, then you win. So you can lose 2 trades, then on the 3rd trade you come back. So I want to ensure our viewers out there that it's not a bed of roses. You have to lose. So if you don't want to lose, please don't join. But if you are free about the normal business, because even if you wake up and start farming, you have no control whether the rain will come down or not. But here what we can control is the risk. We protect our accounts. That's our number one goal, to control our capital by risking what we can afford to lose.
What you can afford to lose.
For the stability of your mind. Then secondly, by doing what we call
because you heard yesterday in the Monitor newspaper, 30% of the Ugandan population have mental issues, and a lot of those mental problems surround finances and financial decisions.
Yes. Yeah. So we are saying that if I have $2,000, if I walk along with Nigeria, it's very hard to start a business with $2,000. Before you pay rent, the money is off. But if I put it on my phone, I can make off $50 of that today. Then tomorrow I might lose $10. Then the other I make 50 or 40. So it is enough income for an average Ugandan to start with.
And to survive.
Yeah, and to survive.
Okay. That is very interesting information. The fact that there are sharks out there, and it's those who have a bigger stake, those who are the bigger players, the big boys, like you would say, the big boys who are the ones who chart and manage and maneuver and influence the markets, the hedge funds. They're the ones that influence the markets. That's very interesting. Moses, are there